Welcome back, and joining me with more insight on the day's trade is Graeme Franck from PSG Wealth Sandton, Grayston. Thank you so much for your time, Graeme. Let's actually start off with what happened over the weekend. And of course, we got more details out on that today with a cut in reciprocal tariffs between the US and China. And those US markets are flying. Talk to me about this outcome and the impact on the markets.
Yeah, as you said in your introduction, they have dropped tariffs by, I don't know why they selected this number, but 115%.
Yeah.
So in other words, the tariffs for US goods on China were 145. So that minus 115 equals 30.
Yeah.
The other way around was 125. So that minus 115 equals 10%. So that's how the tariffs have been reduced. Yeah, the market has breathed a huge sigh of relief. As I think I've said on your show a couple of times, no one wins a war of attrition against China. So I think maybe the US is now seeing that this is starting to impact the economy and the political ratings. But yeah, the NASDAQ and the tech giants are really the ones that are benefiting in the US at the moment. Just look at my screen here. Amazon's up 8, Apple up 5, Nvidia up 5. So yeah, the real blue chips are really running hard on the back of this news.
Amazing. I actually think I did see that something that is not doing so well is gold. And of course, a lot of people have been asking themselves when we would start to see a softening there. But of course, none of this is, I guess, permanent. There's still 90 days. So we will see. But quite surprisingly, I mean, I was pleasantly surprised to see that they came out with an outcome so soon. Right, Graeme, we had a flurry of earnings and trading statements coming out on the JSE. Let's actually start off with MTN. I do note that we have been getting a number of quarterly updates from the different regions, and the group numbers actually came out today for the first quarter. We have seen an upward momentum in the performance of MTN. Are they on solid footing at the moment?
Yeah, I mean, so just to put it into perspective, the shares have gone from around 80 Rand to 120 in the last 6 months. So short term, they've had a bounce. If you had to look back 5 years, the shares have really gone nowhere for 5 years, albeit, very volatile in between that period. And I think the market has been worried over the longer term about where they are, some of the emerging markets, Iran, Nigeria, and the fact that they tend to get banana skins quite a lot of the time. Coupled with airtime is always a headwind. I mean, I've got kids. I don't think when last they've made a phone call on normal airtime, it's always WhatsApp. So you're always going to have headwinds on the airtime and tailwinds on the data side, and that's exactly what we've seen. So what's driven this set of results? Two things: Nigeria revenues were up 40% as a result of them being allowed to raise prices per the Nigerian regulator. And then their data revenue was up 18%, and what they call fintech, so their technology side, also up 18%, as opposed to normal airtime down 1%, which means overall revenue was up 10%. So that was a sigh of relief. And as I say, the shares have bounced from sort of 80 to 120 Rand since that Nigerian announcement came out that they were allowed to increase prices.
All right. Well, let's go into the property sector, starting off with Bullwin that came out with annual results today. They talk about a tale of two halves, but we did see a decline from the top to the bottom line. But that's shares surging 5% in morning trade. What did the markets hold on to there?
Yeah, I mean, this, as you rightly say, it has been a very volatile share. I looked at the share price just in the last year. It's oscillated between 160 cents, so 1.60 Rand, and 260 cents. And I think it closed in the middle at about 204 odd today. So it's obviously a very small cap. The liquidity is pretty poor. If you believe the historic PE, which you always got to look at forward PEs, but if you look at the historic price earnings ratio, it sits at 8.5 times. Again, I would be a little bit hesitant to that, given that, as you say, it's been a tale of two halves, and this is a very volatile, illiquid share, much the same as Calgo M3, where that share price was down 10% today. So these smaller cap property shares really have have battled in this environment that we're seeing at the moment.
Yeah, indeed. Well, it's quite interesting to see the different sharp movements in the shares today, because we saw a very, very sharp gain on Lewis, 15% on its trading statement. Talk to me about that. I see that headline earnings, they expect headline earnings per share to rise by as much as 65%. I mean, Lewis really seems like one of the good, stable companies with great momentum on earnings.
So, yeah, I mean, I just looked at the numbers earlier. As you say, it was a trading statement. So headline earnings per share between 55 and 65% up. It's trading sort of closer to its 1 year high of 87 Rand. It traded close at about 80 Rand, somewhere around there. But, you know, its dividend historically is between 6 and 7 Rand. So it's still sitting on a fairly decent dividend yield despite the run in the share price. But, yeah, I mean, the market obviously breathed a huge sigh of relief. I think the results were driven by an expansion in the debtors book, higher sales in their traditional retail operations. Again, my only caveat on Lewis is it tends to be quite a low volume share on the JSE. So when I looked earlier, 34,000 shares are traded hands, which actually for Lewis is quite good. But if you go back and look at its 3-month averages, it's a lot lower than 34,000. So be a little bit careful on the price movements on some of these illiquid shares.
All right. Well, let us get to your stock pick for today. Where are you finding opportunity today, Graeme?
So I'm just going to go for another boring Standard Bank. I mean, I think last time I was here, I said AVI, which is the top, in my opinion, one of the top industrial shares. Standard Bank, again, it was up 3% today, notwithstanding that the PE is around 9 times, the dividend yield 6.7, call it 7%. And, you know, if you believe that the SA market is going to continue to do well, which we do think, then Standard Bank is a pretty good blue chip. The one thing just to end off on, the resource sector was down, as you said in your introduction, 5%, but that was really driven by the gold sector, which is actually quite a good thing because gold is a fiat currency, and with the tariffs and the settling down of markets, gold was down substantially, which is somewhat masked the returns on the JSE today.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Graeme. That was Graeme Franck from PSG Wealth Sandton, Grayston.